In the financial markets as well, it's a deja vu moment of 2008. Market experts are once again talking about bank collapses in the US. Here in India, the ripple effects have sent markets tumbling. The Nifty dropped more than 250 points, while the Sensex tumbled by almost 900 points. The million-dollar question is, what's happening? At the center of this financial nightmare is the Silicon Valley Bank. As the name suggests, it is headquartered in Silicon Valley. The SVB is the 16th largest bank in America and is focused on lending to startups. In fact, around 56% of their loans were to venture capitalists and private equity. But the last couple of years have been tough for SVB's clients. Tech companies and startups have lost millions in market capital. Many of them tried to withdraw funds from the Silicon Valley Bank to tide over bad times. The problem is, the SVB did not have enough money. They had used the depositors' money to buy long-term bonds, whose value crashed in the last 1 year. Just like here in India, the American Central Bank has been hiking interest rates to fight inflation. These rate hikes made the long-term bonds less valuable. End result? The Silicon Valley Bank collapsed. They simply did not have enough money to service their clients. On Friday, the bank was shut down by California regulators. They put the bank under the US Federal Deposit Insurance Corporation. Now, the worry is this could be another Lehman Brothers moment, that the SVB collapse could trigger a chain reaction and hurt the American banking system. So, earlier today, US President Joe Biden sought to temper those fears. He said Americans should be confident about the health of their banking system. He also said that taxpayers should not pay for the losses of failed banks. Listen in.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable.